Welcome to the fascinating world of global capital markets. If you've ever wondered about the intricate web that connects financial markets around the globe, this video is for you. Whether you're an investor looking to diversify your portfolio or simply curious about how money flows across borders, understanding global capital markets is essential in today's interconnected economy. From bustling stock exchanges to sophisticated bond markets, global capital markets encompass a vast array of trading platforms where individuals and institutions alike buy and sell various financial instruments. In this article, we'll explore the different types of global capital markets, discuss their benefits and risks, and provide insights on how you can participate in this dynamic realm. So fasten your seatbelts as we delve into the exciting world of global capital markets where fortunes are made, economies thrive or stumble, and opportunities abound for those who dare to venture into these ever-evolving financial landscapes. Let's get started. The different types of global capital markets. Global capital markets encompass a wide array of financial systems that facilitate the buying and selling of various forms of capital, such as stocks, bonds, currencies, and commodities. These markets are essential for businesses, governments, and individuals to raise funds for investments or meet their financing needs. One type of global capital market is the stock market. This is where companies issue shares to investors in exchange for ownership stakes in their business. Stock markets provide opportunities for investors to buy and sell these shares on an organized platform. Another type is the bond market. In this market, governments and corporations issue bonds as a means of borrowing money from investors. Bondholders receive periodic interest payments until the bond matures, when they will receive their principal investment back. Currency markets play a vital role in facilitating international trade by allowing participants to exchange one currency for another at determined rates. This enables businesses to engage in cross-border transactions smoothly. Commodity markets involve trading raw materials such as gold, oil, agricultural products, or metals. These markets provide hedging options against price volatility and allow participants to speculate on future price movements. Derivatives markets are another significant component of global capital markets. Here, traders can enter into contracts based on underlying assets like stocks or commodities with predetermined terms regarding price and time. Each type of global capital market has its own characteristics, but together they form an interconnected web that drives economic growth worldwide. The benefits of global capital markets. The benefits of global capital markets are far-reaching and have a significant impact on the global economy. One of the key advantages is increased liquidity, as these markets provide a platform for buying and selling financial instruments such as stocks, bonds, and commodities. This allows investors to easily enter or exit positions, contributing to overall market efficiency. Global capital markets also promote economic growth by facilitating access to funding for businesses. Companies can raise capital through initial public offerings, IPOs, or issuing debt securities, enabling them to expand operations, invest in research and development, or acquire other companies. Moreover, global capital markets foster competition among countries by attracting foreign investment. This influx of funds stimulates economic activity and job creation within those nations. It also encourages governments to implement sound economic policies that attract both domestic and international investors. In addition to these macroeconomic benefits, individual investors can diversify their portfolios by investing in different regions around the world. By spreading risk across various asset classes and geographic locations, they can potentially enhance returns while reducing exposure to local market fluctuations. Global capital markets play a crucial role in promoting economic growth, encouraging investment flows between countries and providing opportunities for individuals seeking diversification in their investment strategies. The risks of global capital markets. As with any investment opportunity, global capital markets come with their fair share of risks. It is important for investors to be aware of these risks before diving into the world of international investments. One major risk is currency exchange rate fluctuations. When investing in foreign markets, investors are exposed to the risk that the value of the local currency will change relative to their own currency. These fluctuations can significantly impact investment returns and can sometimes lead to losses. Political and economic instability in foreign countries is another risk factor. Changes in government policies, social unrest, or economic crises can have a profound effect on global capital markets. Investors must carefully assess the stability and reliability of a country's political and economic systems before making investment decisions. Another potential risk is regulatory differences between countries. Each country has its own set of rules and regulations regarding investments, disclosure requirements, and investor protection measures. Navigating through these varying regulations can be complex and time-consuming for investors. Liquidity risk also exists in global capital markets. Some smaller or less developed markets may not have as much trading activity or depth as larger markets, which means it could be more difficult for investors to buy or sell securities at desired prices. There are systemic risks that affect all financial markets globally. For example, events such as financial crises or sharp market downturns can have far-reaching consequences across borders. It's crucial for investors to thoroughly research and understand these risks before participating in global capital markets. By being aware of potential pitfalls, they can make informed decisions about their investments and take steps to mitigate those risks whenever possible. How to participate in global capital markets. Participating in global capital markets can be an exciting and potentially lucrative venture. Here are a few steps to help you get started. 1. Educate yourself. Before diving into global capital markets, it's essential to understand how they work. Familiarize yourself with concepts like stocks, bonds, currencies, and commodities. 2. Research and analyze. Conduct thorough research on the countries or regions you are interested in investing in. Stay updated on economic indicators, political stability, and market trends. 3. Choose your investment vehicle. Decide whether you want to invest directly by purchasing individual stocks or bonds or indirectly through mutual funds or exchange-traded funds, ETFs. 4. Find a reputable brokerage firm. Look for a brokerage firm that offers access to international markets and has a good reputation for customer service and reliability. 5. Develop a diversified portfolio. Spreading your investments across different asset classes and geographic regions can mitigate risk while maximizing potential returns. 6. Trade responsibly. Set clear investment goals and stick to them. Avoid making impulsive decisions based on short-term market fluctuations. 7. Monitor your investments. Keep track of the performance of your investments regularly but avoid obsessively checking their value every day, as this can lead to unnecessary stress. Remember that participating in global capital markets involves risks, so always consult with financial professionals before making any major investment decisions. Conclusion. In this video, we have explored the world of global capital markets and gained a better understanding of what they are. These markets play a vital role in our global economy, facilitating the flow of capital across borders and enabling businesses to raise funds for expansion and growth. We learned about different types of global capital markets, including stock exchanges, bond markets, and foreign exchange markets. Each market serves its unique purpose but collectively contributes to the efficient allocation of resources on a global scale. Global capital markets offer numerous benefits. They provide opportunities for investors to diversify their portfolios and access a wide range of investment options from around the world. For companies, these markets offer access to larger pools of liquidity and increased visibility among international investors. However, it's important to acknowledge that participating in global capital markets also comes with risks. Volatility in these markets can lead to significant fluctuations in asset prices, which may result in financial losses. Additionally, regulatory differences across jurisdictions can introduce complexities for participants navigating multiple legal frameworks. To participate effectively in global capital markets, individuals and organizations should educate themselves on market dynamics and stay informed about geopolitical events that can impact market conditions. Working with experienced financial advisors or brokers can help mitigate risks while maximizing opportunities. As we conclude this discussion on global capital markets, it's essential to recognize their crucial role as engines driving economic growth worldwide. By fostering cross-border investments and collaboration between nations' economies, these interconnected systems contribute significantly to prosperity at both individual and societal levels. So whether you're an investor looking for new avenues or a company seeking funding sources beyond national boundaries, understanding how global capital markets function is paramount for achieving your financial goals amidst an ever-evolving landscape.